Good morning, traders. It's Friday, February 23rd. Taking a look at the charts, equities a little bit mixed. We got the Russell down about 17th of a percent. The rest of the indexes are up about a tenth of a percent. Overall, big pop there yesterday. Big gap to the upside with Nvidia really re-sparking a rally, a tech-based rally. We saw a lot of the momentum stocks. If we take a look at the hot list, semiconductors, AI, home builders, consumer discretionary, OIH, definitely some randomness going on, but we definitely saw the leaders in technology and small cap stocks really kind of muscling their way up, as long as they were tech focused on the tech side. So we can see here, we are long XLP, had a nice move up there yesterday, and it is considered a defensive type of play. Hopefully we're going to see this push up, hit our first target there, maybe today, maybe next week, which would be ideal. And then we'll be able to lock in gains and protect that position. Overall, we are long SSO and QLD, both of them screaming to the upside from our entry points. We've got the SSO is up about 31% from our entry. If we take a look at QLD, QLD is up about 32%. So they're both pretty much in sync with their gains and muscling their way up. We're definitely starting to see a little bit more volatility in the market. We're starting to see some chatter here. This is a bit of a news-based move, which I'm not a fan of, but the trend is still strong. And when we go and we look at the sentiment of the chart, yet considering yesterday was a massive move to the upside, we didn't actually see any FOMO. There wasn't. It wasn't that we got into one of these. Let me just grab a drawing tool here. It isn't as if we got into a FOMO type move. These type of scenarios, which typically signal some type of pullback, where the market gets overbought and then it pulls back. So considering we did that, we hit some new all-time highs. It was a big move up. We didn't actually have FOMO. It wasn't the whole market piling in, everybody trying to chase pricing higher. It was really everybody piling into some tech and Nvidia kind of muscling the market up. So it wasn't a crowded play. And, we have been seeing, if we look at the daily chart, we get a rally, we get a consolidation. After consolidation, we can see a multi-day rally. And then we have a consolidation, a multi-day rally, consolidation, this is a pretty big rally. We've had about a week and a half consolidation. It's just starting to break out. We could start to see this continue to pick up more speed and run higher. And eventually we'll probably see this FOMO indicator of people piling in, and we'll probably see then some type of pause, some type of bull flag pattern happen from there. So we'll see how that unfolds. The trend is still up. The moving averages are all spaced out, all just kind of fanning out and moving up. So overall, the trend is pretty strong, pretty consistent here. And even though I do think we're starting to see early signs of increased volatility, and we're seeing, some news-based moves driving this market, some distribution selling, we don't really want to step in front of it. And this market could continue to just keep going up and up and up until proven otherwise. So eventually one of these pullbacks will turn into a downtrend. We will get closed out of our positions, but we don't know when that's going to happen. And the seasonality chart, which I don't know if I have pulled up here, seasonality chart shows that we could continue to more or less move up here into May. So that we need to be aware of. And if this trend keeps continuing, we want to make sure we ride it up with whichever positions we have, which are the QLD, XLP, SSO, which the two index plays are leveraged to help counter not having our full investment in, allows us to capture still some decent gains as the market moves up. Overall, let's go take a look. Let's take a look over at the bond market. Bonds are up about 0.2%, kind of fizzling out. Not too much interest in them, with the Fed talking about not really changing rates, and of course people wanting to move into stocks. It has bonds a little bit out of favor. We got the dollar down a little bit today. Gold is up a little bit. The dollar, again, has gone from a series of bear flags to a series of bull flags. And more or less the moving averages now are sloping up. And we kind of have this potential rounding basing formation here over the last little bit. If we go back even further, it has a much larger basing formation that it's really still within, but overall it is in an upward shorter term bias here. So at any point here, we could see the dollar start to move up. And if we do see that move up, it could put some pressure on the markets, or the markets could be pausing or pulling back a bit. Some pressure on gold potentially. We'll see how that unfolds. If we look at gold, it is up a little bit. It's still flagging sideways in a very big chart pattern. If we look at gold miners like GDXJ, again, just in a very strong downtrend. All the moving averages are down and price is still pretty bearish. Same with if we look at silver and silver miners, they're kind of trading sideways and still a series of more or less lower highs and lower lows, kind of trendless and nothing to get excited about yet. Looking at crude oil, down 1.8%. It is kind of struggling here around resistance. We got the 150-day. You can see it is potentially trying to carve out a rounding bottom. If it can pop and break here, it could have a pretty decent run. Might run up to 88 or somewhere in that range. But overall, it is stuck under resistance and in a basing formation. We'll see. Maybe it's going to come back down to the lower end of the range. We do have a series of higher lows. We do have a short-term series of higher highs, but it's stuck under this kind of key resistance area. We'll see if it gets rejected or what happens here. Overall, let's just take a look at the long-term trend. Here's the weekly chart of the SP 500 trends. Obviously, we've got bullish phases, short-term bearish phases where we don't want to be holding. Bullish, bearish, bullish. We had bearish phase, and now we're back into that bullish phase and breaking out, obviously, to new all-time highs. So this market have another big push. We'll see how things unfold. And yeah, I think actually something interesting. We talked about this in the mentoring session. If you didn't watch or join the mentoring session yesterday, it's posted, the recording in the members area in the menu. Just go to mentoring and it'll pull up our sessions there. But the SP 500 NASDAQ are hitting new all-time highs. But let's go to the Russell 2000 here. And we'll drop to the weekly chart to compare it to that long-term chart of the SP 500 I just showed up. If we take a look at that, you can see the Russell 2000 put in this top, and then it is broken down and it is really flagging sideways. This could be seen as a big bear flag, which means it will have another step to the downside eventually. Right now, we're in this little phase where people are getting sucked into the stock market because the SP 500 and NASDAQ are hitting new highs. We have tech. We might see this push and hook up a little bit. We do see this a lot in the Russell 2000 where you'll get a push where everybody piles into the last minute. They don't want to miss out on a rally, and then it gets sold into. We had this right over here where the market broke down and then it consolidated for a little while. And then there was a little push where everybody finally shifted gears and they wanted to get back into the market. They got in and then the market tanked. So we could be in a very similar scenario where this might move up a bit and then we could go into a bigger sell-off. So when we look at the majority of stocks, which to me is the Russell 2000 or like the ARK ETFs, like the ARK ETFs, they all have this topping phase. And in the mentoring session, one of the members, I think it was RSP, I think it was, is the SP 500 equal weighted SP 500. This is a really good, we talked about this in the mentoring session. If you look at the SP 500 and equal weight the stocks in there, we're actually, whoops, let me grab a drawing tool. We're actually just coming up to a potential double top in the market. So it's going to be very interesting. The stock index itself, if you remove some of the big tech heavyweights, really is just, it's not at all-time highs yet. It's coming up for a major double top. This is kind of that, you could see this as that complacency rally. It kind of had a crack to the downside, is drifting higher, coming back up to hit its head on resistance for a little, maybe a kiss goodbye, and then it sells off and then eventually breaks down. And who knows what happens if we start to break this topping phase. But this is a good ETF to get an idea of kind of the general SP 500 market when you strip out the weightings of the big tech. Definitely seeing money move into the large caps because people want to go into the blue chips and the dividend stocks as defensive plays. So the SP 500 is moving up and holding its ground, but definitely not breaking out to all-time highs just yet, and gives us a really good view that we are in general in a stage 3 topping phase. Actually, let's add in IWM here. If we add the small caps and the equal weighted SP 500 and look at the blended chart, I haven't ever looked at this, but not sure what happened. I don't know why it doesn't want to show much data there. Oh, here we go. Okay. So if we blend those two together, this is a pretty interesting angle, actually. We definitely have had a little blow off top in the stock market back in, this was 2021. The small caps are weighted in here. That's when the small caps actually topped out. And now we're in this complacency move, which if we pull up, let me even pull this over. If we look at our stage analysis, whoa, hold on. You can see here, this is a very, I mean, most of you already know this. I talk about this all the time, but here we have the blow-off phase. We have a crack to the downside, a complacency move, and then we go off a cliff into a stage 4 decline. So these two ETFs are, I think, a really good indicator to tell us what the general market is doing. If you strip out the news, you strip out the high flyer AI stocks and all that stuff, we can see this is kind of like what's running under the hood, what the majority of portfolios and stocks are actually doing. Anyway, I think that's about it for now. Other than that, we'll see how the things unfold and go from there. Talk to you soon. Bye-bye.
Do you want to make money by copying the same trades a professional is taking? Well, now you can. Since 1997, Chris Vermeulen has focused on building technology to help himself become more profitable. He now shares his swing trading and passive investing signal with others just like you. Let these technically proven strategies protect your assets while profiting from the biggest trends, no matter if the market is rising or falling. Visit www.thetechnicaltraders.com to learn more.